Welcome back. You're with us here on Lunch Hour. Joining us now, Jayant Manglik, President, Retail Distribution at Religare Securities. Jayant, great to have you with us. Lots to talk about today when it comes to gold. To start off with, how much should one have gold in terms of asset allocation, Jayant? I mean, what would be the kind of percentage that you would recommend at a time like this?
Right. So if these were ordinary times, I think 10% would have been sufficient in anybody's portfolio. But given the special times we are in, I think clearly at least 20 to 25% of your portfolio could be allocated towards bullion, which would include gold as well as silver.
So what are some of the different ways that one could look at investing in gold? What would be the most efficient? Would it be, directly through ETFs, other means? What would be the most efficient way?
I think, anyway you would have invested in gold. I think even if it was jewelry, one would have made, a lot of money over the last few years. But if going in as a financial investment, it depends on what type of the requirements of the clients are. So for example, people who are comfortable with dealing in equities would favor ETFs because it is available on the same platform, and it's a simple, secure and easy way to transact gold. People who do not want to open a demat account, for example, would prefer a gold fund of funds, which are now available in the markets, and you can also get fractional units there, just like other mutual funds. But somebody who has a requirement to get physical gold at the end of, after they've collected some amount, then e-gold is the preferred way to go, because you can either hold it in electronic form, or if you wish, you can collect it in physical form after you bought the gold. And finally, of course, there is gold futures. For people who have a trading angle to gold and who would like to do leverage trading and maybe convert it into delivery at the end of the contract cycle, futures is the best place to be. So depending on the individual client's requirement, there are different products available in the market.
Right. Jan, do you feel that, gold is also becoming more of a hedging tool for investors? Do you feel that trend is also emerging?
I think whenever you talk about asset allocation or portfolios, you would want products which are not correlated to each other. So to that extent, it has always been, and that would be true of any other asset in the portfolio as well. It would be a hedging tool in that sense. Also, it would be a hedge against inflation. But I think the key point here is that it's been 12 years where we've seen gold, virtually just go on a 45-degree angle on any chart with, great returns, whether it is a 25% CAGR over the last 5 years or 30% over the last 1 year. Almost any time one would have invested in the last 1 decade, you would have ended up making money. So I think it's not really fair to say that it's only a hedging tool anymore. I think it is an asset class which, one would invest not just for your allocation, but also for just sheer gains.
Going ahead, Jayant, what are some of the factors that you feel could possibly impact gold, or if we were to look at it the other way, what are some of the factors you feel could really drive investment going ahead this year?
I think the key reason why gold has charged up over the last decade or so has been really the negative interest rates which have been prevailing across the world, and that situation continues as is. So that, of course, is the single biggest reason why you will see gold prices continuing to be either firm or moving up in a general way. There will be times like the present when you see the US dollar strengthening against the euro or the yen, and you see gold prices softening. But as far as India is concerned, that actually gets offset by the the depreciation of the rupee against the dollar, given our high fiscal deficit, etc. It doesn't look like that situation is going to change soon. So overall, I would say that low interest rates across the world are going to drive the price of gold, and that's a situation which will continue as is for the foreseeable future.
Okay, if we were to get an outlook on that price of gold, has gained a little over 4% this year. What's the kind of rise or fall you see for 2012?
I would say that looking at a 9 to 12 month number, and obviously it's very difficult because of the number of international factors which impact the price of gold. But having said that, a 10% increase from current prices looks, in rupee terms, looks eminently reachable, and anything beyond that I would term as likely, if not just probable.
All right, Jayant, we leave it there. Thank you so much for joining us. Great to have you on this auspicious day as well of Akshaya Tritiya. And it's also the day that the IPO of jewelry retailer Tribhuvandas Bhimji Zaveri, or TBZ, hit the markets. Bloomberg UTV Surbhi Upadhyay visited the company's store in Zaveri Bazaar in Mumbai, caught up with the director. Let's hear an excerpt of that conversation.